Let's start with the liquidity environment. And this is a post here from BitPain talking about how this bull market has occurred through a vastly different liquidity environment than the previous bull market, which was during the COVID era quantitative easing environment. Now we are in the quantitative tightening environment where we've been, and we're starting to flip back to a QE environment. So this is an interesting perspective on Bitcoin price, because we've grinded up the past since 2023, mid 2022, in this QT environment, where Bitcoin in the previous QT environment was in a bear market. And you can see that the left side of the chart there. So I'll pass it over to you, John. What do you think about how important is this?
Yeah, for me, I think this just reiterates the theme that we've definitely hit on, but it's worth hitting on it again, which is the people who think that we're at an analogous point, December 2025 to what happened in December 2021, which was obviously a peak, and then some very tough months and years ahead for Bitcoin. Just the backdrop from a macro perspective, and you can look at it in terms of interest rates, Fed interest rate policy, inflation. I think I said interest rates twice there. I meant to say inflation one of those times. Central bank balance sheets, money supply, the direction of federal spending, the crypto collapses and the contagion, Bitcoin's valuation from pick your valuation metric. I like the market value, realized value, the fact that ETFs didn't exist, like on and on. Everything now is just completely different in the positive direction, in my view, for Bitcoin compared to November, December of 2021. And BitPain is highlighting more of the macro factor, like what is the Fed doing? And that's one of the things that's more beneficial for Bitcoin now compared to 4 years ago. But it's really like a long list of a dozen things. And I know most people hear that and say, okay, then why the disconnect on the price? And we can get into why that is. But I think it's just pretty objectively true that the backdrop for Bitcoin now is night and day compared to what it was in the fourth quarter of 2021.
Yeah, Cory, your thoughts on the liquidity environments?
I think there's still just a lot of uncertainty out there. I think there are people waiting to see what happens with a new Fed chair. A lot of people were hoping in a sort of backwards way that inflation prints would come in hot. They came in a little lower than some people were expecting, which makes it less likely to lower interest rates. And so I think there's just still some kind of dis-ease about which way this thing will go. Everything's basically driven by CapEx from Mag 7 stocks and AI things. And everyone is just wondering, is this like a local bubble or is just like the little one? And if you get off the train, you miss the big one. And it's just kind of, it's a really uncertain moment in time. When I look at Bitcoin, I would just say we didn't have any kind of euphoria or blow off top. So the chances of some kind of big crash from here is just minuscule compared to what it was in previous cycles. So I think cycles are just dead by virtue of that. And my base case is that we actually see a new all-time high in 2026, which has never happened before. There was never a price in 2014 that was higher than the all-time high in 13, never a price in 18 higher than 17, never a price in 22 higher than 21. And I think there's more than a 50% chance that we bust through 125, 126 sometime in 2026. There's just, as John was just ripping through, there's just so many positive things for Bitcoin right now, and quantitative tightening is over, and it's in the government's interest to spend heading into the elections, especially when the president is unpopular as ours is right now. So we'll see what happens.
Here's another good chart to look at if you're feeling nervous about where we are with Bitcoin right now. 89,000 today, down from the 126 high. This is a post from John, and it's showing the lowest price each year for Bitcoin, which is interesting. If you compound the yearly lows, it's a 75% return for almost a decade now. Of course, everyone loves posting the all-time high charts when we're pumping, but I think this chart shows a maturity test for Bitcoin. Are the lows getting higher? And the rising lows mean you've got diminishing panic, real accumulation, institutions refusing to let it die. And this kind of plays into what I've been talking about a lot on the show, where I think we've entered an era where we don't see these, barring any massive macro socio-political events, we don't see these 80% drawdowns anymore, massive like bear markets. I think the floor is more 30 or 40%. We're testing that right now. So we'll see if that holds true. But I think the lowest prices each calendar year here will just continue to get higher, and we won't see these massive bear markets that lead to this 2022, 2023 bars on this chart.
And for the super deep inside Bitcoin people, if you see 2020, the 49.71, this looked at closing price. I put closing in quotes because Bitcoin is obviously a global digital commodity that trades all the time. But if just to make the data set easier to work with, you're not going to take every single tick on the chart. So you're going to take the closing price. People will remember in 2020, there was a period where I think Bitcoin touched 4K, but that was an intraday number. So a closing price, the lowest was 4,900.
Oh, you East Coast people aren't up late like us folks on the West Coast. We hit 36 something overnight on BitMEX if you were watching Asia.
There you go.
The kimchi trade.
Yeah, that was Arthur's playground. Had a lot of liquidity back in the day. Also notable for BlockFi's asset-backed loan operation breaking completely overnight, and they actually couldn't liquidate anybody, and the whole thing would have gone out of business if the price stayed down there. But they were fortunate to get a bounce, and then the next day, Pomp and Zach Prince came out and said, "We did you a favor. We decided not to liquidate you guys."
Isn't BlockFi the Zoom?
The FooshFi, yeah.
The FlooshFi, yeah.
Yeah, I think it's called Burr now. I think it's BRR, I believe is the ticker.
Appropriate. We've seen a lot of developments this week and some comments from Saylor and Larry Fink on institutional developments this week. We'll take a look first at this tweet from the Swan accounts. Sovereign funds are buying every correction. And Larry Fink mentions this. We'll take a look at a clip from Larry talking about sovereign funds buying. Banks are sprinting toward Bitcoin services. The world is realizing the Bitcoin is built for the AI era. This is a great, we put these out just about every day on the Swan handle, these great in-depth threads about these subjects. So if you're not subscribed to the Swan handle, you should do that now and get these really high signal threads every day on the account. Let's take a look quickly at Fink, as I mentioned here.
We're seeing more and more legitimate long-only investors investing in it. There was an article about a foundation, endowment just bought a lot of IBIT. But I can tell you there are a number of sovereign funds that are standing by. They're adding incrementally at 120, at 100. I know they bought more in the 80s. That's fine. And they're establishing a longer position. And you own it over years. This is not a trade. You own it for a purpose.
And then Saylor on a similar subject.
All the banks in the world to embrace crypto, to embrace Bitcoin in 4 to 8 years would be fast. What you see here is it's happening much faster. What we've seen is BNY Mellon, PNC Bank, Citibank, JP Morgan, Wells Fargo, Bank of America, Vanguard, all of these have flipped from a hostile, negative, or skeptical view to a positive view in the last 12 months. We have announcements. Schwab is going to custody Bitcoin and extend credit against crypto assets early next year. Citi is doing the same thing. It used to be I couldn't get a loan against a coin from any major bank, and now if I counted the top 10 banks in the United States, 8 of them are actually engaged in crypto lending, and they've all flipped their stance in the last 6 months.
All right. Saylor talked about a couple of developments on the Bank of America front and Vanguard this week. Bank of America announced that it will allow its wealth advisors to recommend a 1 to 4% allocation to crypto assets starting in January. And this announcement follows Vanguard's, which is basically they ended the ban on allowing their clients to buy into the Bitcoin ETFs, and had a big bump the day that ban, for lack of a better word, was lifted. So we've got a lot of development here this week. Saylor and Fink both pitching that institutions are increasing their exposure and embracing of Bitcoin at a faster rate than we may have even expected a few years ago. So yeah, I'll throw it over to you guys. What do you guys make of this trend? Is this happening faster than you thought, Cory?
No, I thought institutions were coming back in 21, 22 because they said they were. It just evidently takes 3 or 4 years for them to actually do it.
Yeah.
Of everything you just showed us, really the most stunning one was just what a what a great solid pitch Uncle Larry just gave, Larry Fink from BlackRock on stage at DealBook. That is the right way to think about Bitcoin. It's something you buy and hold for at least the midterm, ideally the long term. We always try to encourage people not to buy any Bitcoin that they think they're going to have to sell within the next 5 years. And I think I guide my friends and family toward at least 10. And either way, by the time you've held it for 5 years or 10 years, you ain't selling for the most part. So it's a good way to get them over the hump and get them thinking the right way. So I think that's really interesting. I don't know how Saylor got to 8 out of 10 banks doing digital asset lending. That's definitely not true. Maybe he's talking about their wealth management arm letting you take a portfolio loan if your portfolio includes some IBIT or some MSTR. Maybe that's possibly true, but that seems rather ambitious. I'll wait for John to chime in with a couple. I've got a couple more from what you showed us, but
I took that to mean that, and maybe this just happens on a one-off basis or a case-by-case basis, that he himself and that MSTR couldn't get a loan against Bitcoin, but maybe I'm wrong about that.
they might be able to get it just as a corporate entity, but not against their Bitcoin. That's not an offering that 8 out of 10 large US banks have, that's for sure.
Fair enough. John?
Yeah, where my head goes on all this stuff is this is adoption from like as serious of entities and platforms as obviously there's still going to be way more people and entities to adopt, but just like the caliber of the entities and the platforms that are embracing Bitcoin, it's like as high quality as it gets, whether it's Harvard, B of A, Merrill Lynch, Larry Fink, sovereign wealth funds, and Vanguard. And a little Bitcoin history for you guys. I'm not going to make you guess the date. I wouldn't expect you to remember the date. Tesla, when they publicly announced in 2021 that they bought Bitcoin, so it was February 8th, 2021. Do you guys want to guess what the price did roughly one day in percentage return on the back of that announcement?
15.
It was good guess. Depending on which tick you pick, is something between 13 and 17%.
Yeah,
so,
nailed it.
I remember
it. Yep. So I think maybe we're anchored to that, maybe incorrectly, or at least we just expect it to be that kind of quick of a reaction. That was in the middle of an already pretty raging bull market for Bitcoin. It was a smaller market, so I guess it was easier for an announcement to move the price. Like we could rationalize it. But it does seem crazy to me that, like I said, Vanguard, Harvard, B of A, Merrill Lynch, and Middle Eastern sovereign wealth funds are all embracing Bitcoin for the long term. This is different than in 2018. I can still remember late 2017, early 2018. I'm at Goldman at the time, and shops like Goldman were announcing, oh, we're going to do something with crypto. They had no idea what they were going to do with crypto. They just saw the price going up. It was in the news, and they're just like, we're going to open up a crypto team. That's what they were saying. But that meant absolutely nothing. And then when the price tanked, they went on to do absolutely nothing with crypto. This is different. Like Harvard owning $500 million worth of a Bitcoin ETF is a long-term bet on Bitcoin. So I think zoom out is warranted here. I think when we look back a few months or quarters from now, we're going to say, okay, what was the signal of the fourth quarter of 2025? It was all those entities announcing that they're embracing Bitcoin. And it's just going to become way less important that the short-term price action happened to be a 20 to 30% drop, depending where you measure it from. So yeah, I think this is all massive news in the long arc of Bitcoin's history.
One I forgot to click on here is CFTC has approved federally regulated spot Bitcoin trading as of December 4th. And these are what's called designated contract markets where commodities like gold are traded. So it's not talking about exchanges or a service like Swan where you can buy Bitcoin. These are the big federally regulated exchanges that trade all the big commodities, right? It's a shift that provides institutions like pension funds and endowments with compliant pathways to allocate to Bitcoin. So I think this could be a huge deal. Again, we have a great video and thread on the Swan handle about this that Adam Livingston has put together, and you can check that out, the whole thread in the video. But John, what do you think about this? How important is it?
Yeah, so I'll admit I haven't looked into this one enough yet. I have a few things bookmarked on this one that I want to look into.
It's fresh. This just dropped yesterday. So
yeah, it's fresh. And I'll admit I didn't have a reason in my prior career to be very well versed in what exactly a CFTC registered exchange is and what kind of volume goes through them versus other avenues. So for me, for now, without having a ton of detail on it, I just put it in the category of it's becoming more legitimate, more part of the system, which I'm not trying to launch us into the debate, but it does the whole thing of the cypherpunk early ethos. Some people don't like this, but then it's also, hey, this is the path to Bitcoin becoming a widely adopted monetary asset, whether you like it or not. So I think this is part of that path.
I'll chime in and just say, anytime you see a big expansion in access for buying and selling Bitcoin, absent everything else held constant, it means that it's more likely that Bitcoin goes up and it's more likely that volatility goes down. And so every time new trading venues open up and new access to Vanguard, Schwab, all these commodities, exchanges and desks and OTC markets and all of this being able to access Bitcoin, that's what you should think. There's more liquidity, volatility comes down over time, number goes up over time. So it's a smoother path over time, less opportunities for a 10x gain in 18 months or something like that, but more and more just looking like a steady savings technology that you can trust.
Yeah, exactly. And this is part of why I think that we're not going to see these massive drops anymore. Those were really driven by retail and speculators deciding, hey, I'm freaking out basically about what's happening with price action. Don't have a long-term thesis. They haven't done the work to develop that conviction. But everything we're talking about here is access to professional traders and money managers, right? And they will have a thesis and they will do the work to develop conviction, or they won't invest in it. And so when these events happen where price goes down 30%, that's an opportunity to buy and start stacking. And so this is, like Cory was saying, this is the maturation of the market. And to John's point, I think I'm hearing fewer people really with this disdain against institutional adoption these days. Maybe they've all gone to Nostr or something, but I think my thought is always like, how could you ever expect Bitcoin to become a global reserve currency without integrating into the financial system? So I think that's just a red herring and not a very well thought through argument, but it's like the Trojan horse thing. You've got to get into the system if you really want to change it, I think.